also. So it's moving in the right direction. I would say we will start commercial operations somewhere in the FY27 timeframe for the 6 gigawatt facility. As far as the 600 crore investment is concerned, it is essentially for land and for connectivity. We are looking at how do we provide one-stop solution for our customers from the perspective of maybe EPC contracts, maybe overall offerings for renewable power projects. So this is therefore an initial tranche that we are given. As this business starts getting more and more fructified, we will be in a position to come and tell you about the details.
Got it, sir. And thanks for that. And just to get a sense on what is the overall spend for the 5.4 and 6 gigawatt facility as of now?
Yeah. So basically for the cell facility, we've almost completed our Capex, which is about 2,400 and, thereabouts. And for the new Capex, which is ongoing, initial spends have been made for about 300 crores.
Got it. Thanks so much. I'll come back in the queue for follow-ups.
Thank you. We'll take the next question from the line of Prateek Kumar from Jefferies. Please go ahead.
Hello. Yeah. Good morning. Good morning, sir. My first question is on the cell capacity again. So you said December onwards you expected to start commissioning of the project. So I remember you talking about 1.4 gigawatt commissioning initially, then remaining 4 gigawatt was to commission in March. So now everything is accelerated to December in terms of commissioning. And related question is there like specific testing, like if you want to sell these cells in US, is there any specific timelines for testing which the buyer may want to do, and then only he will end up buying the product, or there's no real timeline, you can immediately start selling the product? This is the first question.
Great, Prateek. Thank you very much for the question. You remember it correctly. 1.4 gigawatts is what we are trying to switch on first, which is what I would say will get into commercial production somewhere in December. Our goal continues to be that by March of 2025, we will have the entire 5.4 gigawatts. So 1.4 gigawatts of monoPERC and 4 gigawatts of TOPCon cell capacity should be up and running and in various stages of maturation. So the first few lines, which will be switched on anytime now, would have stabilized by then, and maybe the later lines will need to stabilize. On the question of what kind of testing is required, there are specified standards, and all the specified tests as per the standard, we already have the capability with us. So all the customer inspections, all the customer related requirements, we will be in a position to fulfill them within our factory itself for its quality, for its efficiency, and so on and so forth. And that way we'll be able to use our own cells in our own modules within India as well as in the United States.
Yeah, so my question was would that be available for sale? I mean, what is the kind of ramp up you are expecting in FY26, let's say, for the cell manufacturing?
So for this fiscal, I would say we would be in the region of around 100 megawatts, being conservative. That will be the kind of directional number that we will be looking at. By, of course, next financial year, I would say in the first couple of months, we would have a reasonably fully ramped up facility. And so one could expect for the first year of operation, anywhere between 60% odd of capacity utilization factor.
Okay. My second question is on your EBITDA growth ex other income, which is like sort of bit slower side in this quarter, and revenues also. So is this material change in US mix which has happened, which was like probably higher profitable and which has impacted the EBITDA growth this quarter?
Yes, so you're absolutely right. I mean, last year, in the mix, the exports were much larger than domestic production, and that has almost completely flipped in this year. And of course, the pricing has also changed. So those are the two reasons why you would see, an overall reduction, frankly, even on the revenue side, and as well as on the EBITDA side. I'll have Sonal comment on the exact numbers.
Yeah, I just want to point out a couple of things here. So while you see the revenue is about 1%, if you look at the expense line also, it is, contained and it's stagnant. And in between, if you see, we have managed the COGS margin pretty well. And that has expanded by almost 5%. So while the prices of module also come down, inputs also come down. So, we have to look at the margin, and that's what we have managed in this quarter. And we'll continue to focus on it in the coming quarters.
Thank you very much, Prateek.
Sir, can you give the US mix or export mix in this year and last year and maybe in this the quarter one?
So again, directionally, last year we were around 60%, and this year we are around 27%.
Sure,
from a sales mix perspective.
Thank you. I'll get to the queue. Thank you.
Thank you. We'll take the next question from the line of Deepak Krishnan from Kotak Institutional Equities. Please go ahead.
Hi, sir. Am I audible?
Yes, please proceed.
Yes.
So I just wanted to sort of understand, I think we are at a pretty advanced stage for the 1.4 gigawatt in the US, but the further capacity expansions, how are we looking at it, what could be the potential challenges or positives that we are looking at from an IRA perspective? Do we still require IRA to go ahead with that, or we will be in a wait and watch mode, and once there is only policy uncertainty, that's when we'll sort of go and expand over there?
Deepak, great question on the United States. United States, we are extremely committed to United States. It's a big market. It is a growing market. And we will approach this market with a certain amount of aggression, which we already have in the past. And so therefore, are we going to reduce the gas? Or I would say maybe gas is the wrong euphemism to be used here. But, are we going to reduce the acceleration there? The answer to that is absolutely no. Having said that, the additional 3.4 gigawatt capacity and potentially 5 gigawatt cell capacity, we will definitely look at how the policy landscape evolves. Given the change of dispensation there, it's important for us to know in which direction it is moving. And no sooner that clarity comes up, we will continue on our expansion spree. The most important factor we need to remember here is that solar energy is the cheapest form of energy. And so that will ensure that the United States and the various states which form the United States will actually aggressively move forward towards that. Our factory actually is in Texas, which, as you know, is a Republican state. But if you look at which is the state which has actually added the largest amount of solar capacity last year, the answer is Texas at 6.5 gigawatts. So our hopes are pinned on a fairly large US market as we move forward.
Sure. Maybe just a follow-up to that. So if I look at the quarter, obviously you indicated one is 27% is exports. That's indirectly impacted our realizations also as domestic has picked up. But for the full year, how are we targeting in terms of export and domestic mix? And for the 13.3 gigawatt capacity we have, what is the rough production numbers that we're sort of targeting for FY25?
So from the mix, this particular year is going to be a bit of a year which is veered more towards domestic. So the pattern may not change substantially, maybe a little more of exports from where we stand, but the pattern may not dramatically change.
Sure. And maybe just wanted to understand the 600 crore investment you are doing. Would that be into renewable IPPs, or what are we sort of investing the 600 odd crores for? Would we get into IPP business, or these are just adjacencies to, sort of help us expand our presence in module as well as sort of GPCR?
It is all of the above. It would mean, potentially looking at land and connectivity for our own self, at the same time, for IPP type of a business.
Sure, sir. Those are my questions, and best of luck for future quarters.
Thank you very much, Deepak.
Thank you. The next question is from the line of Subramaniam Yadav from SBI Life Insurance. Please go ahead.
Sir, as you mentioned, the mix has changed this year to around 27%. Is it because of intense competition from the Southeast Asian country, where it is expected that some duty will be levied there, and hence the inventory build-up might have happened from their side? Or is it our cost is a bit higher than their cell cost, module cost? If you can put some color on this, and going ahead, how do you see the next 6 months export for us?
Mr. Subramanian, thank you very much for the question. A very pertinent question. The reduction is definitely not because of competition. It is actually just a point in time. If you see, even today, our order book actually, there is a preponderance of exports in our order book mix at this point in time. So it's definitely not because of any structural reasons of pricing. It is just a cycle that you go through. You will see that in the next year things will be different, and it will keep evolving as we move forward.
Okay. And sir, can you just give us some figure on the pricing of the module, how much it has come down vis-a-vis next year and this year?
So, last year for the US, realizations were in the region of 28-30 cents. And this year they are kind of approaching towards somewhere around 24 cents or so. And for India, from around 21 cents or so, they are approaching to around 17 odd cents. Ballpark numbers.
Okay. Great. Thank you. Thank you very much.
Thank you very much, Subramanian.
Thank you. The next question is from the line of Ashish Upganlawar from InvesQ PMS. Please go ahead.
Yeah, sir, the quoted capacity that you mentioned around 12 gigawatts and the numbers that we spoke about, I think 3.3 gigawatts for the first half. So this would be maybe 50% on the utilization roughly maybe. So can you explain me why, since the demand you say is very, very strong, so why this situation?
So utilization is not because of the fact that the lines are idle. It's actually because of various factors. I mean, in fact, our factories are running 24/7. So it is not, the utilization factor is not less because of lack of customers or lack of demand. It is because the way you manage your factory, it is because the type of demand, the changeovers that are required, that kind of leads us to the utilization factor of, as you rightly calculated, somewhere around 50-60%. And so that, at any given point, the 12 gigawatts that you quoted is a nameplate capacity. And typically, you don't get to that point. If everything remains constant and you can run the factories 24/7 without any changes, without any holidays, you can get to maybe 70-80% of that capacity. At this point in time, what happens is that some of the lines are for a given particular customer. Some customers want monoPERC, some customers want TOPCon, and that will require changes of lines. And each time a line changes, there are certain number of days which are lost in production, and that is what leads to this utilization rate. Our constant endeavor is to actually keep getting better and better at that. So if you see from last year onwards to this year, it's been a very substantial jump in our utilization, and you will keep seeing that the capacity utilization will keep getting better and better because of